10 reasons to invest in real estate right now. I'm Clayton Morris, the founder of Morris Invest. And on this channel, we hope to make you a more intelligent real estate investor. And I've got 10 great reasons that I think real estate is the number one asset class to invest and protect your family's future, not only from a wealth preservation mechanism, right, making sure that your money has a hedge against inflation and all of the market turmoil and market volatility, but also as a growth mechanism so that I can hand cash and cash flow and a producing asset down to my family. There is nothing better. I mean, owning a business is great, but then you got to make sure your kids actually want to run your business when you hand it down to them. But owning real estate as a business allows that passive income to be handed down generation to generation. So let's get into that. So 10 reasons today that I want to go through. Now, if you're looking to build wealth, increase your overall net worth, and create monthly cash flow, in my opinion, there's no better investment than long-term rental real estate investing. Buy and hold real estate is what we call it in the industry. So I'm going to go through a couple of notes that I have here that I really think, I sat down and I really was putting this list together because a lot of this has really transformed my family, has transformed the hundreds upon hundreds of clients that we've worked with over the years at Morris Invest, who, we get Christmas cards from individuals whose lives are changed because they bought their first rental property 4 years ago. Then they've added their second, then their third. Now they're up to 7 properties, and they've made life-changing decisions that have allowed them to quit their job, not drive 2 hours to and from work on a regular basis, transform their lives. And they really asked their question at the beginning, why am I doing this? I want to transform my family, right? I want to make a better position financially for myself and my family's future. That's why I believe real estate is amazing. So as I was going through this list, a lot of these things some of them brought tears to my eyes because these were the things that changed my life. So number one, when you talk about this, when you do all of this correctly, investing in real estate yields high profits, okay? It also has really stable income. It's a consistent income. I remember when I was working for The Man back in the day and was always nervous. Like, are they going to renew my contract? I mean, look at all the stories right now about the rail workers strike, right? These people who at a moment's notice will be called into work. They don't have paid sick leave, right? They're being called into work at a moment's notice. They can't even go to a friend's wedding because they might be called into work at that time. That's the life, right? That's when you're working for somebody else, you live that life. And you don't know when the income is going to be there. You could be laid off tomorrow. So stable income. And on top of numerous other benefits, today I'm going to talk about these top 10 reasons to invest in real estate. So number one, right out of the gate, no other asset class allows you the leverage. Leverage, baby. Can you think of any other investment type that allows you to use the bank's money to build your own wealth? Just think about this, right? This is incredibly powerful because you get to, get 4 or 5 times your buying power, right? You put 20% down, 25% down, and the bank is going to provide the rest for you to buy an asset that produces cash flow, also gives you the full tax benefits. They don't get the tax benefits of the property. You do. There's no other asset class that allows for this. Impossible. So let's use some simple numbers to illustrate this point. You have $100,000, right? You have $100,000 that can buy your $400,000 in performing assets because of the power of leverage, right? You put $100,000 down for a $400,000 asset. It's crazy. It's crazy. That's the power of leverage because all you have to do is come up with that down payment and the bank will then, of course, secure the rest on that loan. There's no other asset class that allows you to harness leverage in this way. It's really, really powerful. All right, number 2, high returns, right? High returns. Real estate investors earn 4 streams of income. Now I'm going to break this down for you, and I'm going to walk you through each one of these 4 streams of income. A lot of people think, oh, it's just the cash flow, right? If I have a renter in that property, it's cash flow. Let's go through this. Here's a quick summary. We've got appreciation, we've got principal reduction, we've got tax benefits, and then finally, we've got cash flow at the end of that list. So let me go over those again. Appreciation, principal reduction, tax benefits, and cash flow. So together, these 4 streams of income actually create double-digit returns in ways that are simply not possible with other asset classes. Unbelievable. So let's go through these. Number 3, appreciation. So number 3 on my list, appreciation refers to a piece of real estate growing in value over time. Well, I'm not a person to really invest because of appreciation. It seems like I end up investing and the appreciation is always there. Like, I have not had properties that have not appreciated in value. Now, if you recall back in 2007, 2008, that's how people were primarily investing. They weren't really focused at all on the cash flow. They were buying properties and then they were selling them like 30 days later because they'd gone up like $30,000 in value, right? And then a lot of people got burned because then suddenly the values dropped like a sack of potatoes because those people didn't have jobs. They actually didn't have the income to support those mortgages. It was a disaster. So I never invested for that type of asset. I never invested for appreciation, but appreciation was always there in all of the assets that I invested in. So I get that extra benefit. That's just not the primary thing that I do. The average appreciation rate on real estate is 3%. So on a property valued at $400,000, that's about $12,000 per year. So as a long-term buy and hold investor, appreciation, again, is powerful because it allows you to slowly and steadily build wealth, your net worth over time. And it allows you further leverage on your properties along the way. So if you buy it for $4,000 and next year it's worth $412, and then the following year it's worth $430 or $440, now you've got all of that additional equity that you didn't have to do anything. The market did, right? As the US dollar goes down, the market appreciated, the house appreciated. Now I get to pull out extra equity in that property and leverage that to buy additional properties. What? Try doing that with gold. Try doing that with stocks. You cannot. It's unbelievable. So number 4 on my list is cash flow. Now, let's dive into a simple definition here. Cash flow is rent minus financing and expenses. That's it. Rent minus financing and expenses. When you buy an investment property, it's the goal, of course, to be cash positive. The numbers don't lie. When you're looking at your numbers ahead of time, you should be cash positive and it should cover all of your expenses and then make a profit above that, right? All of your expenses are covered and then you're cash flow positive above that position. That's the simple math, right? That's the simple formula. Even a simpleton like me could figure it out. And that's how I built massive wealth, by using that formula on cash flow. Now, if you're using leverage like a mortgage, okay, you're obviously going to see less monthly cash flow upfront because you're responsible for a monthly payment every month, right? The entirety of that cash flow will not be realized until later. Let me give you an example. So a friend of mine bought 100 properties. This was about 10 years ago, or maybe right around that time. But 100 properties using financing, okay? This was a big purchase for this individual. And he didn't buy them all at once. I think they were staggered by a few months, over the course of like a year or so, or a year and a half. He ended up acquiring all of these properties. It was a big risk to him, right? He went all in on this and did it, but he did it with leverage. And he made sure, though, that each property would cash flow above his mortgage position and expenses. So he really didn't get to enjoy the benefits of this cash flow at that time because he was paying the mortgages back, right? He had a little profit, but he would put that in the bank to cover expenses and if a water heater had an issue or something. So he just pretended like he didn't even have these properties. Okay, but he did get all the tax benefits of owning these properties, but he just didn't experience the cash flow of all of these properties just yet because he was paying all these mortgages back and all of the financial positions and loans that he had on these things, right? But then something started to happen is after a number of years, about 5 or 6 years, because he was using all of the rent to fire at those mortgages. Every time the rent came in, it was going right to the mortgages. He pretended like he didn't even have them. And then the first batch of properties he bought started to go free and clear. Those mortgages were starting to be paid off. And suddenly, now all of that cash flow is coming in. He's getting the full benefits of the cash flow because there's no mortgage. And then he was using that full benefit to fire the remaining balances on those other mortgages. And what do you know? Like 15, 20, 30 properties start popping. They're all free and clear. Right now, suddenly, he's got all this cash flow. And then eventually, all of them were cash flowing. And then, of course, now he's got a problem because now all of that cash is income. And now he needs to offset that with additional rental purchases because Uncle Sam will start taxing that. But the beauty of that position is that he's able to get all of that cash flow coming in later as he's building up that equity position because his tenants are paying the equity, are creating that equity for him. He's not having to do that. The renter in the property is doing that, increasing his position. It's really amazing. So the entirety of that cash flow comes when the mortgage, of course, is paid down and paid off. Number 5 is principal reduction, which is just what we talked about. So every time you pay down the principal balance on that mortgage, you're building equity. And that is how you're adding to your net worth. Okay? This is how wealthy people think, how they add to their net worth column. That's how wealthy people think on a spreadsheet. What is their net worth? And as that equity position is increasing, their net worth is increasing. That is one of the 4 ways that you are paid. And now, of course, that equity position, that means, less paid in interest. That means ultimately reducing the overall life of your loan. And that means now I've got an equity position that I can leverage in other purchases. It's fabulous. Number 6 on my list is taxes and depreciation. Now, the tax benefits of investing in real estate are legion, right? They're the legend. It's a legend of legions. I don't know. It's big, right? There's nothing else that even comes close to it. Nothing else. Unmatched, unparalleled. Really, it sounds like a movie guy, right? Unparalleled. It's true. There's nothing else that even touches real estate from a tax perspective. One particular tax deduction is depreciation. And of course, it allows you to keep more of your dollars in your pocket. Here's how it works. In fact, you get a deduction not only for the money you've invested in your property, but of course, you also get the money the bank has invested. That's the beauty of this. So they've invested and you get the benefits that the bank has invested in a property for you. Makes no sense, but that's the way the law works. Thank you, Congress. Thanks, U.S. tax code. That's the way it works. So there are multiple tax strategies and deductions, of course. We don't have time to go into all of them here, but they're available to real estate investors, and real estate investing is the number 1 tax most benefited asset class there is. So we always joke about this. Anytime Congress rewrites the tax code, the number 1 investor at the top of that list, the person that takes advantage of the tax code in the United States more than any other person, is a real estate investor. And there's always those news reports where they make fun of certain members of Congress for owning real estate. They all own real estate, by FYI, because they know it. So again, you can play by that game. You can play by their rules. They played that. They built the tennis court. You can play on that tennis court where all the rules currently are. You can go over and try to complain about it and go somewhere else. Right now, though, I'm going to play on the tennis court that currently exists because that's how I'm going to be able to take advantage of the tax code the way it is right now. Great tax team, of course, can help you with that. We've got a tab on our website. If you go to morrisinvest.com, we have a Lower Your Taxes tab at the top of the screen. You can click that and you can work with our tax team. They're fantastic. Number 7 on my list is rent increases. So now we've seen the prices of nearly everything go up and up in recent years, and rental rates are no different. I mean, especially if you're investing in solid high growth markets, you have a healthy economy, you have low crime, you have really healthy job market in those areas. That's where you're going to see a steady rise in rental rates over time. And let me be clear about this. I'm not talking about the price gouging or something, or unethical landlord practices here. No, I'm talking about going up with the market. There will be times in your investing career that you're going to say, that price in the rent really warranted? And it's going to be up to you as a landlord to make that decision. And you can say, no, we don't want to increase the rent right now. Times are tough, things are tight, so we're not going to do that. But of course, if you have a tenant turnover, and the tenant moves out of the property because they're moving, now is a time when you can ethically and not feel guilty about it, raise the rent. Maybe that tenant was there for 5 years and they paid a certain level. Well, the market has changed and rents have gone up since then, 5 years ago. Now you can increase the rent by $500. So again, allow the market, allow your property managers that we work with, talk to them about it, and they will see what's going on in the market and how the rents can be fluctuated. If you're looking to increase rents, be sure that you're working with a great property management team like we do at Morris Invest. We have the best, and they look at the fair, strategic, timely nature of raising rents in a specific market. It's not going to be something that you're just going to decide overnight. They're going to be looking at a whole bunch of factors before they raise the rent. Number 8 on my list is protection against inflation. Guys, look at this inflationary period. We are now seeing double-digit inflation almost across the entire globe right now. Man-made crisis, by the way. So we're seeing this high inflation because we've got a lot of politicians and globalists who are running things who drove us into the toilet. So how are you setting yourself up to be a hedge against inflation? Well, actually, the beauty of real estate investing is that inflation actually benefits real estate investors. How so? Let's go through it. Historically speaking, owning investment properties is a great hedge against inflation. And I have an entire video that I want, I'll put a little card up here on the top here. You can go watch that video specifically on inflation and why there's 3 main reasons why real estate investors are protected from inflation during periods. I'll link it here on the channel and I want you to go see it. But if you want to protect your wealth from the sting of inflation, real estate investing is without a doubt the number one way to go. Because if you've got a piece of property that's at a minimum going up in value like 3%, right? Well, then take that into account in addition to the tax benefits of owning real estate, where you're depreciating that asset and getting that money back on your taxes, in addition to getting the cash flow from that property. You cannot beat it. Of course, and if you've got inflation that's 3, 4, 5%, again, this is an ultimate hedge against that. So prepare yourself from inflation and protect yourself with an asset like real estate. And I would say number 9 on my list goes right with that, which is less risk and volatility. Now, take the stock market, right? We've seen, if you were invested in certain sectors in the stock market, holy smokes, right? An average of 30% down in the stock market. But if you were in stocks like Nvidia or Facebook, or 60, 70% drops in value, huge drops in value from Disney and Tesla and all these like big stocks. You're like, I'm going to be safe. And GE, no, sorry, all of them down, right? And there's certain sectors, there were certain like commodity sectors like uranium and other places that were certain areas that were like flat, like 0% growth. They didn't take a hit. They didn't grow, but they were flat, right? Real estate was flat this year, mostly. We had some price drops, flat, but you're getting the appreciation and tax benefits. So you're kind of like, if you invested this year in this crazy, crazy year and things were flat, you still had the cash flow. You were beating inflation, but prices maybe came down a little bit. I'd take flat any day of the week during a down economy like we've had over the past 10 months. Absolutely the case. Or you could choose to have like a Facebook stock, or one of those other stocks that went down 60%. What would you rather have? At least with a tangible asset like real estate, you're avoiding that risk and the volatility of the stock market because real estate is a tangible asset by nature. It comes with less risk and volatility than the stock market. Now I have a whole video on stocks versus real estate here on the channel, so we'll link that up here in the little card that pops up here. You can check that out as well. All right, number 10 on my list of reasons why I love investing in real estate is freedom. This is what it all comes from, right? I saved the best for last because honestly, financial freedom is at the heart of what we do at Morris Invest. And the best part about investing in real estate, of course, is that it allows you to build a customized plan for you and your family. When we talk to clients on the phone for the very first time, they go to our website, morrisinvest.com, and they click on the book a call button, and they answer a few questions about their situation. And when we get on the phone with them, we love to explain to them that there is no one-size-fits-all approach. Everyone is different. I've talked to families that had a sick child at home, that their medical expenses were so much, and it cost, so one of the spouses could not work. They had to stay home with this child, and that was their why. They wanted to be able to stay home and be with this child, and who wouldn't, right? Or we've had other clients that just, they don't want to be driving 2 hours to and from work every day, and they don't get to come home and have dinner with their family at night, and it provides that freedom. Real estate provides that freedom so that you get to call the shots. You can build consistent passive income that supports your living expenses, right? Covers your living expenses. We call it our financial freedom number. It was the thing that changed my life. So if you go to morrisinvest.com/freedom, you can download. It's a 3-page PDF. We'll have it linked up in the description below. It's totally free. And it's like a worksheet that'll take you through how to figure out your own financial freedom number, what it means to you. What number do you need to hit financially to have all of your expenses covered so that you can live the life that you want? That's really how I define it. How do you live? What does financial freedom mean to you? So if you're ready to start creating that freedom, living that life that you want, I'd like to invite you to download our financial freedom cheat sheet. Again, it's morrisinvest.com/freedom. We will have it in the description below. Now, go out there, folks. Take action. Become a real estate investor. I believe it's the number one way to build wealth. We'll see you next time.